Welcome to the channel, I'm Roy, and today we will be taking a look at my humble S&P 500 portfolio, which I DCA into every month since October 2023. We will take a look at how did it perform thus far for me, and hopefully it can provide you with an insight for you to make a decision whether or not you should invest in the S&P 500 ETFs as well. But before that, just a quick introduction to S&P 500 and why I decided to invest majority of my savings into it. Let's get right into it. The S&P 500 is a stock market index that tracks the top 500 leading US publicly traded companies. This meant that even if the top performing companies crashes and its stock's value goes 6 feet under, falling out of the index, another company will just take its place in the index. Although this is a rare occurrence, it does not mean that it has not happened before. Take a look at this chart by Fortune 500 showing the top 10 US companies in the year 1990, and also this chart showing the top 10 US companies today. You can see that while today's top 10 companies are dominated by the big techs, such is not the case for 1990, which the oil and gas industry reigned as the biggest players. After seeing this, you would think, doesn't this make it a risky investment? I heard tech industry starting to slow down already. Lay off here, lay off there. Well, there will always be some form of risk in any investments. However, I truly think that the risk is on the lower side when it comes to S&P 500. Let me support my statement with the next chart. Here, you can see from 1990, although the world is pivoting from the oil and gas industry towards the tech industry, S&P 500 is still growing at a steady rate. This is because, like I mentioned earlier, 旧的走，新的来, which means the old ones go, new ones come. Though the market did slow down due to the pivoting, but nonetheless still continued to grow. So please keep that in mind if you do decide to invest in S&P 500. That said, I personally think that although the tech industry has slowed down, it still has not reached its fullest potential yet. Yes, I am talking about AI. This is a chart taken from Money US News showing companies who are dipping into the AI space. We can see familiar names from the top 10 S&P 500 index who are also heavily investing into AI. And if it's anyone, the big techs are the ones with the expertise and resources to make it happen. And I strongly believe that there is a whole new world of untapped AI potential. And if the breakthrough does come, there might be a second wave of the tech bubble, making S&P 500 fly to the moon. Coming back to why I decided to have S&P 500 as my biggest investment portfolio, it is the stability, the potential of AI growth, and good track records of its performance. But don't take my word for it, I am a nobody. But here's a post by Investopedia citing an average return of 9.9% since S&P 500 inception in 1928. But once again, I have to emphasize that there will always be risk involved and past performance do not guarantee future performance. Next, we will address on how to actually buy into the S&P 500. You cannot buy directly into the S&P 500 index per se because it's just an index. Instead, you have to buy the funds, more commonly referred as ETFs. There are many ETFs out there that is based on the S&P 500. I will only share what I personally bought into, which is the Vanguard S&P 500 ETF with the ticker symbol VOO. I use Webull to perform my trades and have invested 5,000 SGD into VOO till date. Just a heads up, the prices you see are in USD, in case anyone is wondering where the balance of the 5,000 SGD is. As the last traded price for VOO or any ETFs are always changing, it is extremely hard to report the most accurate figures. So I will just be basing the performance on the time of this screenshot is captured. You can see that I only started buying into VOO in October 2023. Late to the party, but better late than never. Along the way, I sold off some shares because I thought that S&P 500 is going to burst, and apparently it was a mistake, and I should have just kept it. After much research, I learned that S&P 500 is best bought as a super long-term investment like 10, 20, or even 30 years for you to reap its best returns. Currently, my VOO portfolio has an average price of $459.52 with the last traded price of $485.74, netting me a paper profit of 5.71% thus far. A few factors have to be considered if we were to quantify the actual ROI of this ETF. Number one, because that this portfolio hasn't been a full 1 year yet. And number two, the shares are bought at a different time due to the DCA strategy. If you look at the earliest date where I bought into VOO on 9 October 2023, the ROI of this particular share at this particular point would be 22.2%. So, to give a conclusion to this video, should you buy into S&P 500? What happens if S&P 500 suddenly crashes? Well, I know it is scary buying into S&P 500 at all-time high. No one knows where it will go from here. We can only predict based on the past track records, analyze its potential, and try to make the best decision. On this, you have to do your own homework and make your own decision. However, using the all-time high logic, if you look at the chart, pretty much most of any point in time, they are all-time highs, so make your call. What will I do when S&P 500 crashes? I would take the godfather of investment, Charlie Munger's advice, and just soldier on, holding onto the ETF for dear life until it bounces back up. With that, we will end the video off. Thank you for watching till the end. Like and subscribe if you found this video informative. Also leave your comments down on what you think about the S&P 500. Am I making the wrong decision? Let me know. I would very much love to learn from you as well. Thanks and bye.